Let's begin with the economy. You had a rather nice economic outlook quite recently, earlier in June, where the long climb, and you quoted the Richmond Fed President Thomas Barkin, where the economy rode the elevator down, but will have to climb the stairs back up. Is that the way you look at the recovery at the moment, that it's going to take longer and not be as rapid as some people hope?
It's correct. And I think there's a lot of things we know and there's a lot of things we don't know. But we expect real GDP to come back to the 2019 level by the end of 2021. And so there is going to be a lot of repair to be done in the system. There are sectors where the degree of predictability is very high in terms of what may happen. There are other sectors, retail, oil and gas, leisure, gaming, where there's a lot of things we don't know. As much as I would like to tell you that we can predict consumer behavior and how people are going to use anything from airlines to movie theater, we just don't know. And so when I think of the next 12 months, the error rate has to be much higher in terms of prediction.
Just quickly coming back on that, you said there were some areas where you did feel fairly confident. What would be the areas where you think you can predict? You sort of think you know what's going to happen?
Oh, I think the tech sector tells you everything you need to know about what has been predictable. And if I think back in the situation we were on March 15 and 16, if you had told us that the NASDAQ is nearly up 10% on the year, I would have been shocked. And so the recovery of the stock market has been nothing short of extraordinary. And tech companies have done remarkably well and seems to be, for the most part, totally unaffected by recent events.
But do you think those valuations are justified? I mean, surely you'd use the word surprising. That would sound as if you don't think the tech stock should be quite that high again.
Well, I'm hardly an expert on tech stock, but let's talk about credit for 1 second. I think that you've seen an enormous amount of issuance in the credit space from the end of March to today. And we have bridged the liquidity gap. Then there is going to be a long cycle where firms will need to think about solvency and their own businesses and what they can achieve. And if we know anything from history, we know it's a long cycle. It's a cycle where there'll be repair to be done and where some sectors are going to be profoundly affected and will need restructuring. Just think of the airline sector. When are we going to see each other in the flesh, John? And I don't know that. I don't know whether it's 2 weeks away or whether it's 6 months away. Part of it is also the virus, of course, where irrespective of how much work we've done in terms of understanding the risk and keeping our people safe, there's also things we don't know. And as you see cases ticking up in 26 of the states in America, there's just a lot of unknown in terms of people's behavior and what people are willing to do and not.